All right. So happy Sunday. We're looking at Bitcoin on the 4 hour chart, and we have this key area that we're looking at right now. We are in what we call a no trade zone. If you are a trader, and this is one of my rules. So we're starting some form of consolidation. If we break above and close above this resistance, this is an area where we can see price come back to visit. But if we break and close below this line support, of course, we got this downside that could be visited. Let's go back and let's look at some pattern recognitions, and let's look and see if we can find some similar setups in the market that resembles this pattern. And let's go. Let's come over here. Let me see if I can find it. All right, let's look at this area right here. Let me highlight it for you. All right. Okay, let's do a bar replay back to this point. All right, so now I'm gonna take this off. And this is one of the strategies that I use where I go back and I scan through and see if I can see similar patterns to give me a jump on what possibly could occur. All right, so let's say we came into the market today. Typically, when somebody glance at this, they probably think, oh, this probably is an inverted head and shoulders. We're going to go up north. We got a nice impulse or whatever. So we can do the same thing. We can measure to see exactly what prices could potentially head to. So we got this region right here. All right, and of course we got the stream at the top. All right, and then we're gonna measure from here down to get our bearish extension point. All right, so let's get our bearishes. So we're talking about this region right here. Okay, now we're gonna do this trade just like we were just looking at. All right, we got this region of resistance where we currently are, and we have this as support. So should we be trading right now? No. Okay, if we break above here, we close above, we can look to maybe take price here. And if we break and close above below here, we can look to take the trade down here. Now, this is strictly for trading. If you're investing, you can use this as investing. Maybe this will be your accumulation of zone when you start accumulating certain assets if it comes into this region. But really, this video is more so on trading, futures trading or spot trading using Bitcoin and other crypto assets. So this is not really for investing. We got other strategies we use for investing. Um, Also, make sure you hit the like button, subscribe to the channel, whatnot. All right, and nothing on here is investment and advice. This is just my opinion and for entertainment purposes. All right, so let's see. Let's stick to our rules. We're not doing anything, so let's play. Okay, all right. So we broke, right? But we didn't get a what? We didn't get a full candle to close below. Okay, but eventually we had two candles that closed below here. And typically with this, if you want to be very conservative, you will wait until one solid red candle eliminates one of these greens and you get it here. So someone may look to take the trade here. However, for me, because remember when these levels are broken, we typically have a retest. So for me, I would look to enter back in on a retest. Okay, so you got this candle right here as a retest. Um, this green candle blasted back up here, and this is nothing but a liquidity grab. It knocked out some of the short traders because the markets know that there are aggressive traders who jump in and go short as soon as these levels are broken on support, and then they know that a lot of traders go bullish along when resistance is broken. But the conservative traders, all right, they wait for confirmation because they know that this happens. So okay, we're good, and then all of a sudden you get up here and now you're in heavy drawdown, and depending on where your stop losses are, this really knocked out a lot of traders. Okay, so typically, like I said, we want to see some candles close below, and we didn't get a full candle close below until we got these candles starting to close below. All right, so remember, we waited. We didn't take this. We didn't trade the consolidation zone. Okay, so this is heavy rules based. All right. Okay, so you're in the trade now. You was in profit. Now you're in you're in drawdown now. So you see how yo-yoing back and forth. Um, that's the nature of if you're swing trading. So this is more of a swing trade. All right. So you see what's happening. Um, it's a lot of coming back into the zone, out of the zone, or whatnot. So with swing trading, it's better suited for investors because then you have the ability to trade. So as an investor, normally, typically, you are what you are. You have risk tolerance because you're used to seeing your account, value increase, decrease over time because you have a long trajectory of what you're trying to accomplish. So you're not looking to take out profits and things in the immediate future. Right? So, and this is good that you see that. Okay, when you take a trade, you got to be careful of what all these drawdowns. Okay, you got to be careful with that. Okay, all right. So a target was hit. So you see, okay, we're on the 4 hour, but you get what I'm saying. We are what we're swing trading, so it's going to take a little while for your targets to get hit. If you was taking some future contracts out, you're good. You want to make sure your risk management is in place. And you make sure that some of these drawdowns doesn't really affect you. And of course, some people may look at key levels and they say, "Hey, you know what? I want to add maybe to my positions to get a better, um, ratio." And so you can add more at these levels and take the trade down. But nonetheless, our targets were hit. Matter of fact, smashed through our targets, right? But watch this. So I normally go for the first two targets on the uh, Fibonacci retracement. I'm sorry, extension tool. All right, so this is the first two right here, but you got the third one. It looked like it wants to try to come down and get this third one. So this is the ultimate target. I rarely hold a trade to go all the way down that far, but some people who are patient, you can. So why I'm showing this pattern is because this is what I'm thinking shaping up. People think that we're in the clear. No, we still may have some downside pressure coming. Getting close. Almost hit. All right. So stop it. All right. See this line we drew? It was hit. So when did we entered in back somewhere back over here. So it's November. So it took from November all the way to January the 20th. So November, December. So basically 2 months for your targets to hit. So this is swing trading. So you're making a lot of money if you're shorting this or going short in the futures market on this. You held on to it, so you did pretty good. Swing trade is not, you know, uh, suitable for everyone. They may not have the patience for that. So I'm just going to go ahead and stop this. So all right. So where are we at now? Okay. Same situation. Okay. I can move this out because it's not supposed to be there. So what do we have? We have what? We have this resistance. Okay. And we got a support level. So guess what? We're gonna what? We're gonna look, take the trade, maybe wait for a retest, and we take it down to this zone, which falls right in the area that we all anticipate the 30,000 between 28 and 30,000 region for Bitcoin. With all the things going on with the war, fear, it's a lot of things. So that actually could push it down, and that could be the catalyst that the world leaders or big institutions have been waiting for to lick their chops for this. All right, so clear out some of this stuff. Now, when you look at where we at, okay, if we come back into this zone, look to your left. This is accumulation zone. Okay, this has been a huge zone that has shown that buyers have come into the market, which is mainly your institutions. They have loved this area to buy Bitcoin. Now, when you look at what El Salvador, uh, was it El Salvador or Venezuela? Either one. They've been doing a lot of purchasing of Bitcoin. But if you look at the prices that they've been purchasing at, you can tell that whoever is directing their council, they may not be what we call great analysts or chartists when it comes to technical analysis. You can tell that the way they're buying based off of fundamentals. So they looking at fundamentally of Bitcoin being a scarce asset class. They're only going to be a certain amount in existence. And so therefore, the more they accumulate, the more they have, and the more the leverage they have in the future, which is fine. It's cool. However, they're leaving too much money on the table by just blindly going in and just investing at all these various price points. Instead, we should be getting news that they're loading at some of these levels. Okay, instead of getting news that, oh, we just bought this much more, we just bought $300 million more at this level. Like that's was ridiculous. So that goes to show you that a lot of people still don't understand technical analysis. They look at it as a fad. Like technicals married with fundamentals, you become what we call a technical investor. So a technical investor uses fundamentals and technical analysis and marries them together instead of saying one is better than the other or whatnot. So, but if you're day trading, if you're swing trading, if you're trading, you need technicals. You need to be able to look at a chart. You need to be able to see where buyers and sellers are at as far as price action, and that's what you need, right? If you're long term, yes, you're gonna look more on the fundamentals, especially if you're doing something in the equities markets, such as stocks and all kind of stuff like that. So, yeah, the company's earnings and all that stuff will be important. Uh, but we all of us can just look at a chart. If we know what we're looking for, we can get a feel for it. So this, like I said, is potentially so. Like right now, you're like, well, should we be trading? For me and my plan, no, because it's in a no trade zone. It hasn't done anything. Okay. Um, so let's take this one. Let's take this top one off, and let me show you something right quick. All right, we got levels that a lot of times once they broke, they need to be revisited again. So this is a key level that was broken. Okay, so even if we do close above this and we go up, this is an area right here that you have to keep your eye on. Meaning that price could just come back and retest, and then once it retests, then we can go lower. So we can get something like this, and then go down, and it won't look that smooth. But you get what I'm saying. So up in this area here, if we did take this trade and it broke above and closed above and went up here, I would be looking to exit my positions in a spot or futures market right here. Why? Because that is an area of major resistance that would once serve as support. And if you look all the way across the board, price reacted pretty, consistently in this area. It serves. All right, this area is serving as either a major support or a major resistance level. So if this thing was broken, all right, and then look what happened. It came back above, hit support, boom. It just couldn't handle it. All right. This, in fact, this move right here, if you look at it, somebody could have went in, especially on a 4 hour chart, about, oh, this is like an inverted head and shoulders, like I showed you before. Left shoulder, head, potential right shoulder. So what is that? A bullish pattern. So what they would have thought? Oh, we need to take trade up here, right? So, well, look what's happening. We're getting this major drawdown, okay, and it's looking like we're just stair stepping, which we are. We're doing lower lows and lower highs, right? So, and I'll show you. So you got low, lower high, lower low, lower high, and will we make a what? Lower low? If we do, we're in a downtrend. All right. So let's take these off. Let's add in some moving averages to see what we have going on. Okay, so we are below all three moving averages. Okay, so let me clean all this stuff up. Okay, there we go. So we're below the 200, which is bearishness on a daily. We're still we So let me give you something. We would not be officially bullish until on the daily chart we get back above on the 200 moving average. We're below. We're below. We had a death cross. All right, a death cross occurred right here. All right, both of these, right? So you had a lower, uh, you had a smaller moving average cross over the bigger one. So the 20 and the 50 crossed over below this 200, and that is what we call a death cross, which means we got more downside pressure, in which it did occur. All right, so now we got these levels that we really have to monitor. So like I said, we're not truly bullish until we get over this green, and it could slope down, and then we finally start to fight back up. But for right now in the daily, it doesn't look like that's going to happen. Some of you may look and say, "Oh my God, like I'm dreading this." Stop. We don't want to hear that. If you're an investor, you got to get your mind right. This is the best training that you're going to ever get, and being able to see how these prices are moving, and if you really truly believe in the assets that you're investing in. There's no way that people out here um, building infrastructures for this space. Regulation will come, and it needs to come if you want this to be around for a long time, right? So yeah, that's that. But let's go back. Let's look at some different price actions. This is November 2015. Nice little rally up, and look what happened. Okay, look what happened. We got a drop of what 41%. So look back then. Someone complained about that 41% drop. But watch this. People don't give themselves a fighting chance. So we're gonna sit that right there. So let's say they say, you know what, this is a golden opportunity for me to add to my position. All right, and then we're gonna keep this one up here. Let's say for whatever reason you came in the market, you bought here, and you get dragged down. Some of you I've known dropped $30,000, $20,000 in. You went heavy. Now, I don't agree that you went heavy as far as you threw everything in the market at one price point. I think you should scale in. I think you should be more active. You get what I'm saying? I think that you should be able to have enough on the side that you can do weekly, monthly, sometimes even daily. So if it's an asset that I love, like I accumulated a lot of CKB to get to my goal. I was able to get there because I went to a daily plan between $20 to $25 a day. It would automatically draft out my account, so I'm getting it at various price points, right? And then if price drops drastically into a zone, I may deploy more capital. So I know some of you may not have a lot of capital. It's different, scenarios, people in different situations. So you got to come up with a plan that works for you. All right, so we got those key levels. So if you bought here and let's say you didn't do any more buying, you were just afraid. Okay, so look what happens. The the retail investor buys here, they sell here, they quit. Look what happened. Look at the growth. All right. Another scenario: retail buys here, pissed off, doesn't sell, doesn't buy anymore, rallies, 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 get back right here, they get out. They're like, hey, I made profit, but I've been down too long. Okay, when your assets have been down too long, you typically do not when it gets green, you're like a kid in a candy store, like you never ate before, and you're like, man, I have to get out. I have to secure something so you can feel good. So you can walk away with, okay, I didn't lose any money. I made some money, but I'm done. I don't like this. You're not going to turn out to be a great investor. You'll waste the opportunity. So that was 209 days, guys. 209 days. It's 350 days in the 52. I'm sorry. Yeah, 350 a year, right? 365. I'm all off today. So 365 in a year, and out of that, 209 days. So you can feel like crap, right? Because remember, you bought right here at the top. Remember, you bought right here, and then you get this drawdown. All right, now here's the third. You bought right here, but you only put in a little bit. All right, and as prices started to decrease and come down, you're scaling in and you're buying. But more importantly, you're using what? You're using what we call the times two method, meaning that if you got in at 505, you go ahead and times this times what? 1010, and you're gonna buy throughout all the price levels as you can. You'll get to a monthly, weekly, whatever, and you will cease to stop buying once price gets to where right here. So you got in right here, but you're telling yourself you can participate in buying this asset as long as it stays below this level. And it's really good if it can stay below the level you got in at. That's great because it's giving you an opportunity to accumulate. So that's the other alternative investor who does that. And they stick with it. They stick with their guns. All right. So what happens? You get what? Nice move out. All right. Then guess what happens? Remember that other investor who got out right here? All right. He sees this and then he starts regretting, or she starts regretting. And guess what they do? They feel that this is going to keep going. So what do? They jump back in up here at the high again because of what? The greed, the fear of missing out. All that stuff kicks in. Now they're gonna start calculating. They're like, man, if I would have just kept my original position in, man, I'd be up. I should have just stayed in. I'd be up, $70,000 right now. So they get in and then boom, markets pull back. They're furious now. And I'm like, this is not for me. I hate it. The market is against me. They're plotting. It's like they just know that I got in and this is gonna just drop. Why couldn't I benefit from all these people posting all their gains and life-changing, money that's coming in? Why can't I get that? Why? And then it drops even further, and you're like, oh my God. But you know what happened here? They threw everything in again. And now they don't have nothing left. The market gave them a gift back even lower than when they got in the first time, and then they can't do anything about it. And then look what happens again. All right, so they can do what? They can what? They can either throw in a towel, quit, or they just say this time they say forget it. I'm just gonna leave it. And then it rallies, and now they feel good again. They feel good. They feel good. I'm like, man, I'm the man. Like, I'm glad I'm glad I didn't just sell it this time. I'm getting a little smarter, right? I'm good. I'm a genius. And then, boom, look what happened. It dropped below where they got in at again, right here. So now they're negative, and they frustrated again. So what's happening is I'm showing you the trajectory of the emotional roller coaster of what they're going through. They don't have no plan. They don't know. Well, okay, when do you want to scale out? What's your overall goal? So what are you trying to accomplish? Too many people, they look at their portfolio every single day. Like, what you looking for? If you're a true investor, what I remember me going a whole year one time, I only checking my portfolio maybe once, twice, because there was nothing in the market that was supposed to be happening to where it just was supposed to be exploding. And we had long term goals, and we were sticking to it, so we was being disciplined. So we didn't care. Okay, so like right now, there's nothing. Why should I be checking my stuff right now? We already know what's going on in the markets. We know the market's taking a hit. The only thing I should be doing is looking for other assets that may be undervalued, that may be coming into the market right now, that a lot of people don't know about. So what I'm doing other research, and I'm recalibrating. I'm restructuring, looking at, okay, I got some extra funds over here in this asset. Let me roll it over into this one to build this position up. This one like it needs a little bit more help here. Boom, boom, boom. I took my CKB and I liquidated all of my CKB, but I rolled it into some other things, right? But I also just now started back one of the positions in CKB to give another foundation. And now I can, I can work my plan because I was using the profits from CKB to be able, like I said, to build on some cybersecurity assets that we've found in the market. So down, they just miserable right now. They're just killing themselves and with torture of thinking about this stuff. All right, so we rally, we get up. Okay, depending on what this person is. Let's say this person eventually gets it. He gets it. She gets it. So like, you know what? I'm noticing something. I'm not going to be sitting up here looking at my stuff all the time. I'm not going to be doing that stuff. I'm going to actually I'm going to give me a second job, or I'm going to take my bonuses. I'm going to take my tax returns. I'm going to take some of my savings. And when they have these pullbacks, I'm going to start adding because I'm seeing a pattern. So now this person is now starting to turn the corner. They're like, I got it. I see it now. Yeah, I got it. So now they start working it, and then they become great. Look at this. They become great. They're getting it. They see these massive pullbacks. They're not sitting up here running and being fearful. They say, oh, it's back at market structure. Boom. Let me get some more. Okay. Then let me take some. Let me scale out now. Let me take a few here. Let me take, that's how they're working it, right? So what's happening? This is called experience. If you do not participate in this market in all phases, you're not gaining no experience. You're waiting for a lottery. Some of you will get a lottery. You may put something in something. We had plenty of lotteries back then. $77 turned to $30,000, stuff like that, right? But that's not the norm. And typically, when you have a lottery play, you hold on to it because you think it's going to go up forever, and you don't even know when to get out of it. So your returns just diminish over time greatly because you really had no true solid plan, nor probably understood exactly what the project does, right? So we got this nice rally again and whatnot. And then you have the person who just knows, who holds on, who's using tier strategies, who's using methods and all those things, and they're just riding it on up and just hold on. And they have a vision for what they want their portfolio to look like over time. And just look at this massive amount of growth. Now, I did see something on the chart that I want y'all guys to see so you can see exactly where another pattern had emerged, and we potentially could right here. I believe, let me see. This might not be it. Let me see. This one a little bit. See a little V, this V, but that's not. I think this may be the one. Is this one it? Let me go back over here to. Let me press this back down. There's a pattern that I did see over there that did show up that looks similar to where we are right now. That's the only thing I hate by going back that far. You gotta start. Probably could just reset the chart, but I don't want to do too much. All right, so we got this, and then we got this little recovery. So let me go back way over here. Hope I can find it. But I want to give you an alternative because that pattern, even though we have some downside bias, we still could see a potential upside bias as well too. So when you're trading, you have to have a bullish bias and a bearish bias for the most part, right? Because the market can do whatever it wants to do. It's not what we think. Okay. This is not it, but it's 10. But so you see, we had this nice little wick down, strong. All right, and then we had a rally up here. Um, we would do what? We would set our zones basically with this, and we will use the same rules. You know, hey, if it violates here, we take it down. If it goes above here, we do it. And we got to what? We got to break. And then what do we say? You wait for what? Retest. You get the retest, and you get all these days of consolidating, and then we get a break to the upside. Um, see if we can see any more. All right, this one could be like what we seen earlier today a little bit. It's not as much, but you get like a little flat pattern right here. You will do your zones again. If we was back in time, you know, we'll see something like we would do something like this. And of course, we have like that. And we got a break, and then you had 2 days worth of retests. So these levels retested and then went higher. Let's see. Yeah, so I don't want to go back too far, but maybe this one could be one right here. Yeah. Yeah, because I could see some. Yeah, this would be perfect. So I could see somebody saying, "Hey, that's a left shoulder, right shoulder, head inverted, we're going up." Yeah, we gotta be careful with that, right? So what are we doing now? We're marking our zone. Matter of fact, let's go ahead and do this. Let's go ahead and get it back here. All right. So here we go. Key area. All right. So you know you got your bias to the upside and you got your bias to the downside. Simple, right? So we get the breakdown here. So mainly our bias now is going to be to the lower side until it's all right. So you see we get the drop, and that's what you got to understand too. When you see these things like this, so you see we get down here, and then all of a sudden we just broke up here, and you're like, what in the world happened? Well, this is called liquidation. They're getting you. So um, certain elements of swing trading, day trading, you have to be able to lock in profits and your stop loss. If you're in profits, move your stop loss into profits to where you're good to go, because you're going to have these type of things and people coming in the market to try to wipe you out. Now, this is back in 2014. I don't think there was no derivative contracts out on Bitcoin at that time. So, but there is something manipulative in this market where uh, you had this huge momentum of going up to get some sales off. Okay, and then now you see that it dropped. Okay, so if you look left, still an area of market structure that looked like it was trying to fight back to get to. There's a key level right here. See that level, and then we got back and we basically got rejected. Basically made a double top move down, right? So we did get the bias correct, but it seemed like the market really moved drastically behind the wipeout. So this is on a daily, so you do have a lot of gains if you was shorting it. But once again, you need to make sure you lock in profits. Because look what happened. It came back and just wiped out everyone if they didn't. But the bias to the downside was correct, right? So we did have that in. So that's why I wanted to show you guys that. So what we've seen, what we have currently to that, so we possible that we could see that. Let's do something. All right, so now we back. All right, so I ain't gonna keep you long on the video, but that's that. Just a nice little analysis on Bitcoin. Make sure y'all work on y'all psychology, read books, study. Make sure you understand all these projects. I love Quant Stamp. Uh, look that up. I've been continuously adding to my Quant Stamps portfolio or position. I like the cybersecurity aspect of a lot of these projects. So yeah, so like I said, hit the like button, subscribe, leave any comments. All right, y'all enjoy the rest of your day. Y'all stay safe. Happy corning, and may the horse be with you.